Hello and welcome to another update video about GALA. GALA hasn't moved much since yesterday, so still in this potential inverse head and shoulders pattern. At least we're tracking it, a left shoulder ahead, and ideally, and that's what I would like to see before we get a sustained break above this breakout point here, the previous resistance, which was also support before here, and resistance before in December. So that's a key level actually, okay? So before we get a break above that 2.85 cent level, I would like to see a corrective pullback and another rally and then potentially the breakout. And the measured target for this inverse head and shoulders pattern is 6.3 cents. So an inverse head and shoulders is characterized by a few points. So typically we have that left shoulder, which makes a new low, and then we have an even lower low, typically some kind of a nice low, not a double bottom, but really like a one low point there, and then a swift recovery to that previous resistance of the high of the left shoulder, and then obviously we get a right shoulder which would form a higher low, would be accumulation, and typically you want a pattern that looks good in terms of proportions. Okay, so if you add a vertical line here in the middle, so you see actually it's, the head is at least nice, looks good, nice proportions. And if we get a right shoulder, we'd like to have roughly the same length, size, duration, depth as the left shoulder. That would be a perfect inverse head and shoulders pattern. In reality, they are often not perfect, but we would still want it to adhere to certain, proportion, good proportions, okay? So it shouldn't be exactly symmetrical, but sort of roughly. So basically mirrored left and right. But, we don't really need the head and shoulders. Whenever I see it, I mention it because it might add to the probabilities of a trade or a forecast if we don't only see an Elliott wave pattern, but also something like a head and shoulders, or in this case, an inverse head and shoulders pattern. It's a reversal pattern, and typically the breakout point is called the neckline. And that would be an accumulation possibility before a breakout. Not predicting it will definitely happen. Ideally it does. It would just add to the inverse head and shoulders. But note that the trend is still up here locally, and the price doesn't need the right shoulder to break out above the 2.8 cent level. To keep it simple, we're focusing on higher prices against 1.48 cents, which means if the price gets back closer to that level, the reward and risk ratio is favorable. The further away we're from that level, the worse and less favorable the reward to risk ratio. But it doesn't say it will get there. It ideally does. And then we have a setup. This area down here is not only Fibonacci support, it's also an area of structural support. 2.02 cents, 1.85, 1.68, and 1.48 cents are the key support levels. Fibonacci support, also structural support. Here the green lines, and this particular green line, which is located at 1.8 cents, that's the support of the left shoulder. And also here we had support again in August. So first time in June and then again in August. So and if we dive into the microstructure, I think we really only had very limited price action since the last video. So I highlighted to you that we have a possible A, B, C structure complete, but that I need to see a sustained break below the 2.26 cent level to have a, let's say, reliable confirmation that wave B is running. Already, at least a break below the ascending trend line would be an indication. But honestly, it hasn't broken yet. And we haven't broken below that low, but we haven't even taken out that swing high there, okay? So that's what I'm watching for. It actually looks as if we had formed 5 waves up here, but it's not. It looks like an ABC structure at the moment, but it made a new local high. So I would have to shift the 5th wave higher, which is possible, okay, because in diagonals, you're dealing with corrective structures and you always have to be prepared for a change in wave counts. But that only affected the microstructure. It could be still here wave 5 of C, basically complete or nearly complete, as basically 3 waves in A, 3 waves in B, and then yeah, basically here another move up, possibly in wave C. I mean, it can always be a WXY. Again, it's a 3-wave move. It's certainly not an impulse here, okay? And that tells me that, yeah, you know, we might be getting here to the end of that 5th wave of the C wave. Also, you can add another trend line, and then it gives you here something that would look similar to an ascending wedge pattern. They often do break to the downside, so it's just something I'm watching here. This looks like an ascending wedge pattern. They typically indicate exhaustion, but it just indicates exhaustion. It's not a confirmation. The price always has to confirm it, and it can only confirm it with a break below that line. Let me change that to white as well. Oh, it looks different. Maybe here yeah. And then we have a nice ascending wedge, and it all would work nicely, but we only need that breakdown now. That's what I would forecast. I mean, at least we need to prepare for it, okay? A more direct breakout is of course possible. It would be in line with our forecast as well. Depends on which time frame you're looking at, because we're looking for higher prices, but it would be ideal to get a pullback in this uptrend before going higher. So a direct breakout of course possible, but ideally only after we get a first pullback. That's my update about GALA. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye bye.